Stocks, bonds, ETFs, straight out of downtown Chicago. This is Zacks Market Edge.
Welcome to Zacks Market Edge, the podcast about investing in your life. I'm your host, Tracy Reinick, and this week I'm joined by Zacks Senior Strategist and the editor of the Taser portfolio and the Healthcare Innovators portfolio here at Zacks, Kevin Cook, to talk about what's going on with generative AI with NVIDIA, and really to give you some other ideas, like what else is there that's out there that you can invest in to get in on this big, surge in what's going on the AI side. But maybe you've missed out on being an NVIDIA like myself, and you don't know what other plays there are. But surprisingly, there are a bunch of other ways to play what's going on with NVIDIA, just in a little bit different kind of focus. And so I brought Kevin on because he's kind of our NVIDIA guru here at Zacks to talk about it. And also for those who are listening, we're also doing a video podcast on this again, which you can find on Zacks.com/YouTube if you want to check out some of the charts or the other things that we're talking about that we're actually showing on our screen. But otherwise, I know you're all listening in. So this is going to be a good podcast. And welcome, Kevin.
Hey, Tracy, this is one of our favorite topics, or at least mine. So I'm glad we're doing it again.
I know. That's why I had to have you on. Okay, so let's just kind of start with NVIDIA, I guess. Everyone knows it's surging. There's a lot of disbelief at what's happening with its revenue. Most of us who've been around for a while have never seen a company grow their revenue in this dramatic fashion unless they've launched like some kind of new cutting edge product like an iPhone or something like that. And that's like a once in a 30-year event. But now here we have NVIDIA doing the thing that none of us thought a company could really do. So what is going on, and what is your take on all of this like NVIDIA craziness?
So you brought up the iPhone, and I think that is one of the best examples, if we're going to do a compare, right? So maybe it's once every 15 years now, because really this is an iPhone moment for NVIDIA and artificial intelligence. NVIDIA invented the gaming processor, the graphics processing unit over 24 years ago. And I don't think when Jensen Huang was doing that for video games, he really knew when it would become the foundations for artificial intelligence. And that would be like the first question I ever asked him if I got to ask him, like, Jensen, when did you know? What year was it when you knew that these GPUs were going to become the foundation for our artificial intelligence? Well, that started happening. I just became aware of it like in 2016 and really got into it in 2017. And the revolution has just taken off. I mean, they did there's an annual gaming conference that just finished up in August in Cologne, Germany, where all the gamers go and all, game makers and all that. And in 2018, he did a demonstration of a couple of things that were like CGI in real time. And they call them ray tracing and rasterization. And it was like, why were video games so complex and reaching like this level of real-time CGI with light and shadows that, it used to take years to make a movie like that. So, but that's the R&D they did to create artificial intelligence. And now it's just exploding. So what happened is when ChatGPT just like stormed in to the economy and became part of the public awareness, all of a sudden, every major corporation, and when I say every major, I'm talking like not just the Fortune 1000, but you think about the global 2000 major corporations that deal in data, they realized that they needed their own generative AI engines to be able to do this with their own data. Like Splunk says that like 70% of a corporation's data is dark and hidden. Like they're collecting all this data, but they don't see it and they don't know how to use it. So a company like Splunk can help them find it. And then NVIDIA GPU processors can help them do about 7 different things with their data that just are accelerated way beyond traditional data processing.
Yeah, it's interesting because I don't think most people realize like what it is that NVIDIA is making here and how it works in the whole ecosystem, really. But you keep mentioning the data, and I know when NVIDIA reported, it was, this is in their data centers segment. How does that all play out? Like these chips go into the data centers? Is that correct? Is that how it works?
Yes. So if you picture a corporation collecting all this data from whether it's from the internet or mobile devices or whatever they're using to collect consumer data or even industrial data. Like one of the examples that I always like to use that's tangible for people about how machine learning works is a little company called Alteryx made a software platform where they helped Royal Dutch Shell monitor the data of their oil rigs so that they could predict when a part would fail. And that's extremely important to an oil rig. They need to know, like, have a rough idea of like how long can this part run before it's going to fail. So we have to be prepared to replace it. So that's an example of a practical industrial machine learning model. And so NVIDIA, they the GPUs go into data centers. And here's the simple example. Like, think about your laptop or your PC. It's been run on Intel forever, right? And that's a central processing unit. And they used to be slow. It was like a 2-lane highway. It's called serial data transfer. And maybe now it's a 4-way highway. You can buy some pretty fancy Intel Pentium chips that, but those are still CPUs, central processing units. So picture it like a 4-lane highway. Well, GPUs are like 1,000 piano players, all processing at once. So you've got your serial data moving this way at rush hour. What do you got? You got a traffic jam. But with GPUs, you're processing all this in parallel, not serial, in parallel, and it can just go 1,000 times faster. So that's why Jensen Huang has always talked about this as being accelerated computing. And NVIDIA just keeps getting better at it. So in May, when they announced a new chip version called the Grace Hopper that goes in their DGX. A DGX is like a box the size of a small refrigerator that holds 8 of these GPU cards. And when they announced the new Grace Hopper chip, it was an order of magnitude faster than the previous generation. So, and right away, and Jensen Huang said in May at an event called Computex, he said, already Google, Microsoft, and Meta are customers. And once the world heard that, NVIDIA stock took off because then they realized the rest of the Fortune 1000 is going to want to create these themselves. So they need the data processing power. They need to buy several hundred of these DGX boxes, each with a Grace Hopper GPU card. So these things can cost anywhere from $150,000 to $300,000 each for one of these boxes. And corporations want to stack them together to have this, what's called massively parallel architecture. So that's where the data centers come in because they need to house all this, right? NVIDIA is not they're not in the data center business. They're selling the picks and shovels, but somebody else has to build the data center.
Right. Yeah, let's talk about the various infrastructure now, because, if you missed out on NVIDIA and you don't want to dive in here after the big move and everything, there are other ways to play what's happening with NVIDIA through these other companies. Because again, as you just said, NVIDIA is not building the data center, someone else is. And other people are even, servicing it, cooling it, like all these other things have to be done. And those companies are kind of in a Renaissance golden era too, suddenly, because the demand is just that great. I'm not even sure how some of them are keeping up with what's going on.
Well, one of the controversies with NVIDIA's earnings was that they blew the doors off. Like I knew that. So when NVIDIA raised guidance from $7 billion to $11 billion for the Q2. They reported their July quarter. When they raised that guidance in the spring, everybody thought, "Wow, this is amazing," and NVIDIA got above $300. But I said, you know what? The street is still way underestimating this. They don't realize how corporations are climbing over the top of each other to build access to, what's called hyperscale computing, or sometimes called high performance computing, HPC, or hyperscale. And that's what you do when you stack all these DGX boxes together. Now, you can lease that time for $40,000 a day, or maybe even higher than that now. But corporations would prefer to have their own because they want to build their own internal chat GPT, so to speak. So one of the controversies with NVIDIA's earnings is that not only do they blow away the street's expectations, they even blew away mine, coming in at $13.5 billion for the quarter, and then guidance moved to $16 billion, which was like almost $4 billion for Q3 over what they like. How can this be? Well, one of the controversies was one of the data centers called CoreWeave. They said that CoreWeave got a loan from BlackRock. They got a $2.3 billion loan, and they were financing their acquisition of GPUs. And CoreWeave is like they're like a builder, designer, consultant, right? They don't do your data processing for you. They help you build your systems.
I looked them up after,
which is easy to do with NVIDIA.
Sorry, I looked them up after you talked about them, and their actual on their website says that they're in computing infrastructure, basically, like you just said. But I want to make that clear. Yeah.
Yes. Yeah, like you wanted to talk about data centers, and that's what they are. Well, the controversy was, well, how can CoreWeave go get a $2.3 billion loan from BlackRock to buy GPUs? And is that how NVIDIA beat? And so this must be just a one-off, right? Just a one-off, but it's not. Look at I don't know if you guys can see my screen. I want to share this report I wrote on, asking if NVIDIA is cooking the books. This top quote: "We had spent $100 million on H100s." An H100 is the Grace Hopper, the newest advanced GPU card. Venturo said, and he's an executive with CoreWeave. But the Chat GPT moment was when I was like, everything we've thought from a scale perspective may be totally wrong. These people don't need 5,000 GPUs; they need 5 million. And this was a quote in the Wall Street Journal on that morning where they interviewed one of the founders of CoreWeave on August 25th. So this is just an example of the demand where even the data center guys are realizing. And so this is real demand and this is going to extend into 2024 for sure. Because here's how Jensen Huang sums it up, to put some simple numbers on it. He says there's $1 trillion worth of assets in data centers out there, but they're all run, or most of them are run on CPUs, and they all need to migrate to GPUs. So to him, that's almost $1 trillion opportunity over the next 4 years, because they'll spend $250 billion a year to do it. Now, NVIDIA is not the only provider, but you can see how NVIDIA is saying they're going to do $16 billion next quarter. That's probably sustainable for maybe 4 to 8 quarters.
Yeah. I saw that CoreWeave uses only NVIDIA, so they are their main customer there. And also, CoreWeave has several of these big data centers. They just opened up one in the New York region. And then in July, at the end of July, they announced a $1.6 billion data center going in Plano, Texas. So that's where a lot of the 2.3, whatever they're buying from NVIDIA, a lot of it's probably going to go into that facility down there. And this is just one of these companies. Like, this is just only the beginning.
Yeah. So, and you found one as a value investor. You found another huge player, an up and comer that I'd never heard of, called Vertiv. So can you tell us about Vertiv?
Well, Vertiv is also on the infrastructure side and data center services. So they also are helping companies kind of in the consulting area, that kind of thing, to get their data centers up and running. And that business has just boomed as well. So, they are seeing the results of all this that's going on in the rest of the, channel of AI, basically on the chip side, and now, going downstream, so to speak, kind of like energy. But just looking at Vertiv, it's ticker VRT.
While you're talking here, I want to show a chart. Yeah, I want to show a chart of Vertiv right here. So I'm going to blow this up. And so when did you get in? Like May or June when it was like around $20?
Yeah, a number of months ago. And even then it was surging already. And it's hard for any investor, after you've seen a big move in the stock to jump in there. I think it had already doubled or something year to date. But it was cheap. It was trading under 20 times. Its peg was low. The price to sales ratio, like all this other stuff, was still cheap. They had already been reporting earlier this year, because NVIDIA was already seeing it, about the data centers and the hot business there. So we dove in, and then the last earnings report was basically similar to NVIDIA's. They crushed it out of there. They're expected to grow earnings 200% this year. So yeah, they're seeing the downstream benefit. And, I see sales expected to be up 20% year over year here too. And so this is one of those companies that it's more expensive now because it is kept running, as you can see on that chart, but it's still only trading at about 24 times, and its other metrics are still lower. Its PEG is still great. And so I still really like Vertiv here because it's like CoreWeave, but CoreWeave is private, so we can't get in and invest in that yet. But Vertiv, we can. And this is one of those companies that's going to just be one of the beneficiaries of this transformation into the AI.
Yeah, and I think it would help if we talked a little bit about what the goal is of these corporations with their data, with all this. I call it a deluge of data. Splunk calls it dark data, where they're collecting all this, and it's all in all these log files, and they don't know how to use it. Like, we hear the terms AI and we hear generative AI, but what are they actually doing? And so I like list about 6 or 7 things that people should think about that corporations are doing. First, they can take all that data and model it somehow and see, does it tell them anything? Does it give them any new information? And then they maybe can make forecasts, right? They can make forecasts about their business, about an industry. They can also turn things into visualizations, right? Like, all these fancy graphs that we see from not just Statista, but anything where you can create bubbles, right? Like if you can create bubbles to show the impact size of a company in an industry or its valuation. There's hundreds of visualizations that you can do with your data too, that where it speaks to people. Like, show me a picture of the data and then I can understand it. Now it's getting more intense because NVIDIA specializes in something called simulation, where a company can take the data with the model, and without a forecast, they can just run simulations. Like, what if we apply these variables? And I'll give you an example. This is about 5 years ago, BMW adopted NVIDIA technology to simulate the building of a new factory. Because obviously, the auto manufacturers, it's full robotics, but they have to plan this stuff out quite a bit. And so BMW was able to take NVIDIA architecture and create a digital twin of how the factory would run, and then just run simulations to test its efficiency before they invest all the capital to build it. Then automation. I gave the example before about how you could set up a machine learning program to monitor an oil rig's machinery to predict when it might break down. Well, you can do that in any industry now. And then there's just science, right? Like, science is just exploding, whether it's genomics or studying climate change. or any aspect of healthcare, cancer diagnostics. Like, this is what I always tell people: go to the NVIDIA newsroom. Like, that's one of my favorite places to visit, and I had that up here earlier. So you can go to just Google NVIDIA newsroom or NVIDIA blog once a week, and you will find at least 5 new stories about how GPU architectures are being applied for machine learning, deep learning, and what we call AI. Because AI is like this big broad category, but within it are, machine learning, deep learning, and then just all this data modeling. And it just allows corporations to innovate, but also allows scientists to solve problems that they've never had access to before, because they can process trillions of data points per second and then model a complex system.
Yeah, that's a lot of good ways to look at AI for sure in that list you just gave. Let's talk about some more on the, say, down the chain type of companies that I've been discovering as a value investor. Yes, these are still values. So a value investor bought a company called Sterling Infrastructure, and it's ticker STRL. And it's a construction firm in Michigan. And, so you might think, oh, that's kind of boring, but we bought it originally in the portfolio because the infrastructure bill passed, and they're doing infrastructure like, there's going to be charging stations built and broadband expanded and all these things going on through the infrastructure bill. But what I didn't realize is, we're about to have this big build out in the data centers. Like I mentioned earlier, CoreWeave is, building that one in Plano. Well, someone has to build it. And that's what Sterling is doing. They do have an infrastructure type of division. And before it used to be, they were building the distribution centers, right? For Amazon and Walmart and all those places. That was a boom too. But now they're adding into data centers, and they said last quarter as well, the data center side is real hot, and that's got to be picking up steam too, because the stuff has to be built. So Sterling's really taken off this year. It's up 80% year to date. That's not too shabby for this smaller, construction firm, and it's at new all-time highs. And it's still fairly cheap. It has a PE of 20, it has a peg under 1 still, because those earnings are surging. They beat like several quarters in a row now. And, it's expected to continue, and earnings expect to be up over 20% here this year over year. So I like these little kind of companies that are in the background that, are going to see this surge in business because of what's going on at NVIDIA. And then another one that I also just discovered through just running value screens is called Modine Manufacturing. And this is up in your home state, Kevin, of Wisconsin. And and you wouldn't think like, I can find an AI play in Wisconsin right now, but you can, because Modine, one of the things they do is cooling, like HVAC, and a lot of it is commercial. And so what do these huge data centers do? If you're building that one in Plano and it's 110 out there and you've got all these chips in there, you certainly don't want a meltdown or whatever going on in there. So a lot of cooling. And they too said they're seeing a surge in business from the data center side of their business that is, really giving them a boost. And they are up 46% year to date as well. All of these charts kind of look the same. They started taking off when NVIDIA did a couple of months ago. And now people are discovering, hey, maybe the secret word isn't AI on the conference call anymore. Maybe it's data centers. Maybe that's the key word, because all these three, Vertiv, Sterling, and Modine all saw a huge pop after this last earnings report. For Modine, it was like the second record quarter in a row for them. So they're really turning it around, but stock is still cheap. It's trading at 18 times. It too has a peg under 1 at just 0.7. So I like finding these.
Yeah, you've done a great job with this. You found 3 derivative plays, one in construction, one in cooling, and then the actual building of the data center. Do you look at price to sales too? Because it's like, that seems to be where you see that acceleration. Like all of a sudden, the company is growing its sales much faster than than its valuation, than its market cap.
I do. That's definitely in the screen. And all three of these have very good price to sales ratios too. Maybe not quite as cheap on some of them as I would necessarily, screen for, but let me look now. Taking a look at Vertiv here. Let's see. Well, Vertiv is at like 2.3, but compared to NVIDIA's price to sales ratio, this is dirt cheap.
And
Yeah.
yeah, and how fast is it growing its revenues? Like, what's the revenue growth this year and next year? That's probably solid double digits.
Yeah, for some of these, Sterling, it's still single digits because they still have these other divisions and things, and they're not able to do the double digits, not yet, at least. And you also have to remember with some of them, kind of like a home builder would be like for Sterling, you only have so much manpower to actually go out there and build it. A lot of this recent surge is going to go into their backlog to some extent. They're not like just necessarily rushing out the next week and starting these projects. It has to kind of go into the queue, so to speak, and then they will get to it. But these are, some tremendous numbers that they're all posting. And I'm just taking a look here. Sterling Infrastructure price to sales ratio is 1.3. So that's cheap for them. And then let's see. I think Modine was the other one, right? We didn't look at. And these are all Zacks number one ranked stocks too, because the analysts have been caught. There's not a lot of analyst coverage on any of these three companies because they are smaller. Although Vertiv is, almost a large cap here, I believe, but it still doesn't have as much coverage as obviously like NVIDIA or these other tech type of names. So the analysts kind of behind the ball because none of us were expecting this to happen. And so they're all trying to catch up. So I see Modine price to sales ratio is 1.08. So yeah, very cheap on the sales side.
Those are all values. Yeah.
Yeah.
I
Yeah.
want to talk about software for a second before we go,
Okay.
because the one thing that I left out of the discussion is the other reason that NVIDIA has succeeded is because they integrated a full stack, like an ecosystem of hardware and software together. So they basically built a moat because they're just so good at combining hardware and software. They call their system CUDA, which stands for Compute Unified Device Architecture, and just like that's the premier brand. Like AMD is right in there, and AMD will catch up, but AMD can't seem to provide the quantity at the level that NVIDIA does. So that's why NVIDIA is basically got this moat now still for a couple more years. And speaking of software, I have one derivative play. You have three for for the AI revolution. I've got one, and that's a company called Cadence Design Systems, CDNS. They make the software that designs chips. So when an engineer sits down to design a chip, they're not playing with anything physical. They're doing basically CAD CAM, like the old Autodesk CAD CAM, but it's like fifth generation CAD CAM in Cadence, where they can model all those transistors. And this is extremely important because, as you know, microchips and integrated circuits, they've gone down below 10 nanometers. I mean, for scale size, the coronavirus is 50 nanometers big, and we're designing chips with channel architecture pathways and gateways that are less than 10 nanometers apart from each other. So this is like incredibly small, microscopic architectures, and so that's why they need a company like Cadence. And the reasons Cadence is so important to NVIDIA and their partners is because they do everything on simulation too, right? You simulate it on your software engineering platform before you go and send it to Taiwan to get built by Taiwan Semi. So that's my only derivative play for NVIDIA.
So I'm taking a look at Cadence's chart and I see it's up 53% year to date. Should investors be chasing it here? You know, like we are with all of these, they're all surging. Should we be?
Now it is not cheap. It is not
Okay.
cheap, but it's I call it a part of a duopoly. Its main competitor is called Synopsys, SNPS, and they both trade like 20 times sales or more. But they move in lockstep with NVIDIA, and especially since Cadence is an NVIDIA partner, it just, when Cadence finally broke out above 200, hung out around 230 for a while, and as NVIDIA moves higher, Cadence moves higher. So it's just, I think I own it, and I have no interest in selling it here. I think it'll continue to be a long-term play that just keeps getting better, especially as more chip companies, say an Intel or a Qualcomm, want to, begin experimenting with their own GPU products, say on the edge of the cloud.
Okay. I see that sales expected to be up 14.5% this year and earnings up 19.2% in 2023. So that has all the hallmarks of the growth stock, though. It may not be cheap, but you don't care. You're paying for the growth. So yeah. Okay, I'm going to keep an eye on Cadence because I've not been following that one. But this is a good discussion because it gives investors on both ends. If you are a growth investor, you have some growth options. If you're a value investor, you have some value options. But it's a good reminder that what's going on is more than just NVIDIA. It is this whole, ecosystem that's going to develop around AI. There's going to be a lot more companies than just these that we mentioned, but these are the ones that are seeing, the real impacts like in real time right now on what their earnings and their revenue is doing. So I thought it was, pretty vital to do this podcast as quickly as we can to kind of get the word out there. Cause I know a lot of people are kind of depressed if they missed out on NVIDIA. they're like, don't know what to do.
And when people hear data center, they might think of Facebook or Meta,
right,
or
for
Google,
sure.
and that's there's sort of a stigma there, right? It's like, why would I care, that Facebook and Google are just collecting all of our data and they need bigger data centers to process it? Well, I get that. That's a valid concern. But for every Google and Facebook Meta out there doing that, collecting our consumer data, there are hundreds of companies doing good with their data, especially in scientific realms. If somebody's, whether it's, drug modeling or cancer diagnostics or studying climate, there's so much that can be done with these tools once they're plugged in a data center where they can just process massive amounts of data using these massively parallel architectures.
Okay, let me recap the stock tickers we talked about. So there was NVIDIA, of course, NVDA, if you already don't know it. We had Vertiv, V as in Victor, R as in Robert, T as in Tom. There was Sterling Infrastructure. Someone's got to build this stuff. That's S as in Sam, T, R as in Robert, L, STRL. Then we had Modine Manufacturing, ticker MOD. They're in the cooling side of things. And then we had Cadence Design Systems, C as in cat, D as in David, N as in Nancy, S as in Sam. And as always, I'm bringing you whatever the hot topics are. And right now, it's certainly NVIDIA and AI. So that's what we're bringing. But every week, we're going to be bringing you more stock ideas and what's going on out there in the economy and the stock market. So be sure to subscribe. Get us on Apple. We're on Amazon Music. We're on Spotify. And you can always get these video podcasts now on our YouTube channel at zacks.com/YouTube, or just put Zacks Investment Research into your search bar there and you will find us. But be sure to get us somewhere, and I'll see you again next week with some more stocks.